The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Yep, that's me, Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. 5 days a week on the network from 3 to 4 Eastern, just ahead of the Tom O'Brien show from 4 to 6. It's a call-in show. You can use the number 877-927-6648 to give me a call, talk about this market that is probably best described as a melt-up at this point. We did have a nice day of accumulation in the NASDAQ yesterday. Volume just over 1.8 billion shares came in, nicely higher than Monday's level. Not so much on the New York Stock Exchange as we look at the markets here with a little more than 50 minutes left to go in Tuesday's session. We've got NASDAQ volume tracking about 5% below yesterday's level, which again was above average, just over 1.8 billion shares. We're tracking 5% lighter than that today on the NASDAQ. NYSE volume tracking just a little bit higher than what we saw yesterday, 690 million shares traded on the New York Stock Exchange. So we're tracking about 3% higher than that today. But let's start, as we normally do, by taking a look at the NASDAQ composite. Right now, it is trading near its session low. It hit an intraday high of 3,035. It is now trading around 3,022, down fractionally on the day, still holding above its 50-day moving average. The S&P 500, we see a little more than 4 points. 0.3% gain for the S&P 500 to 1432, and the Dow Jones Industrial Average working on, what is that, six session winning streak, trying to make it 6 in a row for the Dow, up close to 26 points today, 0.2% gain to 13,274. So that's where we're at with the major averages. The big news today, we did have the two-day Fed meeting come to a conclusion. I believe the press conference is still going on right now. It may have just ended, but the actual statement came out at 12:30 p.m. Eastern. As expected, the Fed ramped up its bond buying. No surprise there. The Fed will continue its existing program to buy $40 billion a month in mortgage-backed securities. What's new, and it was expected, is an additional $45 billion of monthly longer-term Treasury purchases. These asset purchases are aimed to keep interest rates low. That has been working. What was different this time around in the Fed statement, the Fed would normally say rates are going to stay low for a substantial period of time, and then it was, they'll stay low to 2014 through mid-2015. For the first time, the Fed set some thresholds on unemployment and inflation before it will move to increase interest rates. Instead of saying that rates will stay low until mid-2015. The language in the statement today said that interest rates will remain low as long as the unemployment rate stays above 6.5% and inflation doesn't go above 2.5%. Inflation is definitely on the back burner for the Fed right now. It is not threatened by the prospects for inflation, and when you have stubbornly high unemployment and anemic job growth that we've seen in recent months, there's no reason to think that inflation is going to be a problem, at least in the near term. We do have some inflation data coming up tomorrow Tomorrow we'll get the latest reading from the Producer Price Index. Overall price is expected to be down 0.5%, with the core rate up 0.1%. And on Friday, the latest reading from the Consumer Price Index. Overall price is expected to be down 0.2%, with the core rate up 0.1%. So inflation still not an issue for the Fed, and it shouldn't be. Inflation has been tame, at least the way the government calculates it. So nothing earth-shattering from the Fed today. We do have indices trading off their highs, some sellers coming into the market late here, and it is an uptrend that again was confirmed with a mild follow-through day on Black Friday. It was only a half day of trading, but it is a market uptrend that has its positives and has its negatives. So I've been saying off and on that it's a tough market to be long with conviction, because you just never know, what headline is going to come out of Washington on any given day. It's also tough to be short with conviction as well, because you get a positive headline out of Washington, you get big percentage gains for the market. So it's still definitely a trader's environment out there. When I initiate a buy for the Ultimate Growth Stocks model portfolio, my goal is to hold the stock for a long time. It's been tough to do in the recent market environment. I've been prone to take profits quickly. It's not really my style of investing, but I'm just kind of adapting to the market. Today, I did get rid of 2 holdings that were profitable positions, took gains. So I am currently long 3 names in the Ultimate Growth Stocks model portfolio, and I am short 2 names as well. And all those positions are profitable at this point. So if you want to check out what I've been up to with Ultimate Growth Stocks, you can get a 30-day free trial right on the homepage of tfnn.com. Right along the top, there's a newsletters tab. You can click on newsletters, and then after that, click on investment newsletters, and you can sign up for 30 days free. And also, don't forget, folks, about the Tiger Dollar promotion that we have going on for the holidays. Purchase Tiger Dollars, and we'll donate up to 10% of your purchase price to the Salvation Army. Sign up by December 19th and get a 25% bonus match on any amount over $500. You can use Tiger Dollars to purchase newsletter subscriptions, save a lot of money by using these Tiger Dollars. So be sure to check out that promotion as well on the homepage of tfnn.com. So the Fed comes out, says what it says. No big surprises, but the prospects for lower interest rates certainly, going to stay that way for a while. Not surprisingly, home builders rallied on the news. Let's check in on the ITB. I was saying in yesterday's show that the home builders are still not an area that I want to be in the market right now. I don't have any exposure, not with the ITB or with individual home building names. But the ITB is outperforming nicely today, up 2.6% to 2046. It has reclaimed its 50-day moving average. It's a base building ETF right here. Looks like significant resistance at the 2021 level, but we'll keep an eye on the home builders. You can see a lot of institutional selling in the ITB back here in November. A little bit of accumulation here, but this still looks like a fund that is under net distribution to me. So not really interested in the ITB here. Take a look at some other home builders today. Lennar, kind of a similar setup here. It is up 4% today to 37.86. It's been consolidating gains since early November. Definitely signs of distribution in this home builder as well. Moving on in the group, DR Horton, DHI on the New York Stock Exchange. It fell below its 50-day moving average in November. Very heavy volume, a lot of distribution in the stock in November. It's tried to rally back, but it is still trading below its 50-day moving average. Having a good day today, up 3.7% to 1925. And finally in the group, let's take a look at Ryland Group, RYL. Ryland Group up 4.9% to 34.22. Similar to Lennar. Lennar and Ryland have a better looking chart than DHI at the moment, but Resistance for Ryland Group looks to be right around that 35 area, so it still has about 75 cents to go to see if it can break through that resistance level. But bottom line with the home builders, they really started to rally in earnest in June and July. Usually when you have a big uptrend like that, there is a period of time where stocks pause and digest gains and build new bases. I think that process is probably going to continue with the home builders. They could lead in 2013, but I'm going to need to see a lot more signs of accumulation in this group. And what I'm seeing still is, like I said, net distribution. Some ancillary home building plays. Let's take a look at OCN, Ocwen Financial, trying to firm up, I should say, at its 50-day moving average.